Yet another day of market rallying, giving us some reason to believe that the rally may not be over. Some may be quick to jump and say, wow, prices are super high at this level, and maybe it is time for some sort of sell-off. But if you've been listening to me and watching these videos, one of the fundamental reasons we've been advocating for a continued run in the market has been the successful beating of expectations by companies, which makes it look like the economy is fundamentally pretty strong. And one of the most important announcements of today was Google. Yes, Jeff Bezos and Amazon is huge, but Google is particularly important because Google generates most of their revenue through ad spend. Their revenue was up 23% year over year. So this tells us that businesses en masse, because Google has a wide range and a wide exposure to the entire economy, are advertising on the platform. And typically in times of cost cutting, uncertainty, just general fear and recession, advertising spend is one of the areas companies look to cut first. So to see Google beating expectations in this regard is very good to see. Not only were they just at all-time highs 30 minutes ago, but they are up 7% last I checked after hours. So showing you right here, the market still has room to go, even after a big run today and a massive run off the lows. Now, yes, earnings expansion is certainly happening. Margin expansion is certainly happening. Another thing that is happening and likely to happen that we haven't been seeing yet, but needs to be factored in, is inflation. Inflation puts a multiple on all these things. Earnings are going to grow even more with some further inflation. Maybe we've had some and it hasn't been totally registered yet because there's not upward wage pressure. We don't know. We will see what happens in that regard. But it seems to me pretty certain that some inflation will occur. And the combination of good revenue and earnings and margin expansion by companies multiplied by the inflation is the fundamental reason why I see the market continuing to rise. And we are going to have these periods like last week of deleveraging, where companies, or hedge funds rather, big whales in the stock market take risk off very rapidly. And they've done this throughout the period. And another one will likely happen once we get to some sort of higher threshold. I expect a new all-time high in a couple days. Who knows? We will see what happens with that. But, at some point we'll get another deleveraging. But as long as these earnings continue to do well, if we see some inflation, and if we see a strong economic recovery, we can expect this rally to continue until one of those three things stops. You best believe I'll be looking out for one of those three things to stop. But one of them is happening, and two of them, I believe, have yet to happen in full force. So it looks to me like we've still got some runway in this euphoric environment. Now, let's taper down the euphoria, that's for sure. But we can certainly look for potentially new euphoric gains in areas of the market that are susceptible to these inflation forces and winds, but haven't seen the stock market price movements to reflect that. I point you particularly to real estate, REITs, things with high dividends, and energy. ExxonMobil had a very interesting earnings call today. They talked about how they are producing massive carbon reductions in the air, something that you would not expect. Now, I'm not saying that this is definitely going to delay the onset of electronic vehicles, but there's a lot more to gasoline power besides electronic vehicles. And it looks like we've got in a country and an environment that is conducive to fighting climate change. And one of the biggest ways to fight climate change is to capture carbon. They are taking the equivalent of 25 million cars off the road in carbon capture. And I actually believe I've heard that number is closer to 100 million. So I'm no scientist. I'm an everythingist. But sounds like good to me. I expect this technology to be fully developed and fully implemented on top of oil production. So two revenue streams now they have. And we're talking 2050 kind of time periods, this to be all the way through. No, complete reversal of all the carbon change that has been done. This is expensive technology that's going to lead to some profits for the company that continues to reiterate that its balance sheet is strong and its 7% dividend is safe. So good stock there. I would look at good energy and good real estate. And despite the sell-off in silver, it's one of the most important metals in the world, going to be one of the most important metals in the future, the most reflective known metal to light. Elon Musk is currently trying to beat the speed of light. There's a lot of things going on with light. Electronic vehicles use a lot of silver. I'm staying long. It's a speculative position. Have been long way before this Wall Street bets short squeeze stuff. That, full credit to them, has been good, except apparently it's not possible with silver. Anyways, silver seems to have a floor, and it's a speculative position that seems to have a floor. That's a good combination. Having a lot of upside potential with nothing crazy on the downside, that's what you want to look for in these growth stocks, as me and many others call them. And silver seems to be a very good one. I'm not buying SLV. I think that is a load of trash. There's no way SLV got all the silver they needed to cover all the purchases of SLV recently. I can guarantee you that. Buy the bullion. I've got some bullion right there. If you can see it, gold, silver, platinum, copper, it's all there. Star Wars Legos. Got some stuff in box for Legos. Hedge against inflation. So that's the deal for today. Until next time, peace out.